Hey, what's going on? Strat Soldier here for the podcast Enforce, the only podcast with me, the Strat Soldier, looking at the market through the eyes of the Strat. How you guys doing out there? How you doing? It is June 23rd, and it's late tonight. It's like 11 o'clock tonight. And the market's about to open tomorrow. We got 1 week left of the month. 1 week left of the month. And hey, things are going pretty well. But there's a lot of things at all-time highs. The market is it's an exhaustion risk, all right? And I really don't like to talk about exhaustion risk too much because I think it's overemphasized. But things are at all-time highs. What do I mean? Everything is two up. All the good stuff is already two up on the month, and there's no more stops to be taken out. Look at that. No more stops to be taken out. Are you kidding me? Like, what are we doing here? What are we doing? How far are we going to go? Right? How far are we going? So it's at all-time highs. What are we doing? Where are we going? What? There's no more targets to be taken out. All right. QQQ, same thing. All right. No more targets to be taken out. Where are we going? It's at all-time highs. All right. Looking at SMH, I call it shaking my head because it's also at all-time highs, but it keeps going up. They keep buying semiconductors. It keeps going up. Okay. We looked at over on the weekend shift. We talked about NVIDIA. NVIDIA, all-time highs. All right. All-time highs. Wow. Okay. Pretty interesting, right? MU, Micron, all-time highs. Okay. I'm getting to a point here. I know you guys are like, well, what's your thing here? Even Walmart, all-time highs. Okay. All-time highs. Google, we had Google. Google also. Where am I getting at? What's the point? The point is we are at exhaustion risk, and everything, all the good moves are like done. They're done. I mean, we could get some continuations here, and it could keep moving. Okay, but a lot of it's just done. Okay. I don't want you to get in trouble in the fact that I don't want you to get into a situation where you're just keep buying. Just keep buying. You know what I mean? Because then you'll have a situation like MU. Let's go back to MU, Micron. Okay? And it starts going to the lows on you. Bam. All right? Buyers got what they wanted, all-time highs. It's all the way back up to 157. Are you kidding? And then bam, to the lows. Oh, my goodness. Right? And you're getting killed. Well, it's just going to keep going. It's MU. It's Micron. It's in semiconductors. It's just going to keep going. And you're getting wrecked. I don't want that for you, okay? So what am I talking about? There's a lot of stuff on this chart. What am I talking about? I am talking about the difference between trading and gambling. And I am doing something different with Enforce. I'm streaming this thing. Good evening, Shelly. Good evening, Bien. Very good. Thank you so much for being here. This is very, very late, and if you're listening to this on iTunes or Spotify, thank you so much for being here too. Anyway, what I'm saying is everything's at all-time highs. All the good stuff is already there. The tech sector done. All right. What I mean by done is it's at the broadening formation highs on the month, the week, the day, the 60s. It's up there. So now what do we want to do? Well, we want to look for some things that are not doing that, right? We want to find some things that have room to go up to the upside. That was in Goldman Sachs. That was in, you had some good moves in Chewy. Chewy's one that people like looking at right now. Dog food. Looking at dog food, it's important. People like their pets. The good thing about Chewy is it's moving to the highs, and it's not at all-time highs, okay? All right? Not at all-time highs. It's moving really well, all right? So, again, what am I getting at? I'm talking about the difference between gambling and trading, okay? Gambling is when you have, and I want to clarify this because I talked about it on the weekend shift, but for you guys, the difference between gambling and trading is I'm not, we had last Monday, we had everything go straight to the highs. I mean, in SPY and QQQ, everything, SPY opened up at, it opened up at 541 and went all the way up to 548. All right. And there were no actionable signals for that. It just did it. All right. Gambling says, all right, it's moving. I'm throwing on calls. I'm throwing on shares. I don't care about stops. I'm getting in. Okay. There's people that know how to do that because they've been trading for a long time and they can say, okay, I know what I know how to get out of a bad situation, but I know this is working right now. For example, Dell. There's some good traders out there that caught Dell for 300 and 350% or something like that. That's awesome. That's good. But again, Dell is at, there's some room on Dell, but Dell's at all-time highs. You know what I mean? Where's the actionable? There's some moves in here. There's some moves in here. All right. But I called off Dell and said, Dell's not something we want to look at because there wasn't a lot of magnitude on this. There was not a lot of magnitude on this. It did, from here at 135 up to 140, that's like $5. It went a lot further. Good. All right. At least this had an actionable signal to work. All right. But most people just saw Dell. People are getting in on Dell, and it's a Monday. Start buying start full porting all your money, all your money on this thing to the highs. And they're not talking about their stops. They're not talking about what the exit strategy is. They're not talking about when they're going to take profits. They're not talking about, if things go south, what are we doing here? And there's also people out there doing the exact opposite on the other side. They're trying to fade things. They're trying to fade things without actionable signals. There's no shooters. There's no inside bars to say this is going to the lows. And as price is moving up, they're shorting it, and that's fading. That's also dangerous because that's gambling saying, can't go any further. It's got to drop. It's got to drop. It's going to drop soon. It has to, I necessarily don't want you doing that. I don't want you doing that either because unless you have an actionable signal to the downside and you can say it's going, it hit the top of the broadening formation. Here's my actionable signal. This is where I'm getting in at. Here's my entry and here's my stop. If it let's say it pushes down for a little bit, corrective activity, but then the buyers step back in, this is where I'm getting out. Unless you can do that, you're gambling. Okay. And that's no different than just throwing quarters in the slot machine and hitting buttons. Okay. And people don't want to hear that. There's all these other discords that won't tell you that. They'll tell you just, it's going right now. Put on all your shares, put on all the calls, get them out of the money. 0 DTE, doesn't matter. Buy them. And it works sometimes. But when it doesn't work, they're not out there trying to tell you, hey, where did you get out at? Where's your stops at? What happened? You know what I mean? What went wrong? They're not saying anything about that. They're just saying, oh well, we'll catch the next one, or they're only talking to the people or promoting the people that did do good on that one trade. You know what I mean? Or that one, those few situations that worked out. They're only promoting those people, but the people that got wrecked, the people that lost money, they don't say nothing about them. You know what I mean? People got mad at me because I talked about stop losses. People, post your small losses. If you got a small loss, post it. And people didn't like that either because, people learn by winning. People learn by winning. Yeah, but people also learn how to trade by going, okay, what happens when it's not working? Can you get out of a trade without losing it all? Without losing $200, $300, $400? Do you know how to do that? Or if you have a large account and you did put on a lot of shares and you did put on a lot of options or whatever it is, contracts, is that $200 loss a small loss to you because you do have this large account, you did put on this big size, but you did have your stops? That's also important. And people need to see that kind of stuff. You know what I mean? And I try to show that stuff as well. But these other guys, they don't want to show you that because they want to show these huge gains, and that's good. And they're promoting the people that are doing these things, but they're not showing the people that are getting wrecked and on the wrong side of these trades. So The difference between trading and gambling. So again, gambling is just if the price is moving. I don't care. I don't care. I know it's at all-time highs. I know it's at exhaustion risk. We're just going to keep buying calls. We're just going to keep buying shares, and you know, we'll see where it goes. You know, that's gambling. Same thing if it was going to the lows. Um, you got a stock that's just in the dirt, and some of you guys have been in. You know, you've been trading since, you know, to say 2022. Everything was going to the lows in 2022, straight to the lows, and you know, some things you had to go, okay, the selling is over, it's reversing to the highs, I need to stop shorting this thing. You know what I mean? Because that's also gambling too, where you're just like, I don't care, I'm just going to keep buying puts, I know it's going to go to the lows, and the sellers had enough and it starts moving back up. You can see that in McDonald's. You can see that in the current price action of Mickey D's. They're like, hold on a second, what's going on with our why does everybody hate McDonald's? And so they started putting out news about their new $5 meal deal, because they're like, we got to get people out here buying McDonald's again. You know, because look at these months, to the lows, to the lows, to the lows, and you can say here in June, you know what? I'm just going to keep shorting it. Doesn't matter. It's in a downtrend. I'm just going to keep shorting it, and you ignore this green. You ignore this outside week to the upside and say, you know what? I'm just gonna keep shorting it. Who cares? And then let's just say we get a 3-2 up tomorrow, and this thing starts moving back to the highs, and people start getting back into McDonald's, and you're still shorting it. That's bad. That's bad, and you're not cutting your losing positions. You know what I mean? You're just, hey, it's gonna go. That's gambling. Okay? It's gambling. You know, I don't want you to gamble. A stratter or any good trader, doesn't have to necessarily be the strat, but any good trader is going to say, okay, I started shorting this thing, but now it starts moving back up. I know if it gets above 256, I got to get out of this. This is not good. This is no longer a winning position. Okay. But some people have a higher tolerance for stops than others. You know what I mean? Higher tolerance for risk. And if this just, you know what I mean? Okay, I'm not getting out of it unless it goes 3-2 up. Because it could go inside and down. It could do that. You know, it could. So other people have different tolerances for risk. I understand that. I'm just saying, if this thing goes 3-2 up and you're still in this and you're going, look at this downtrend. Look at this downtrend. It's going to keep going to the lows. And you're not getting out, you're gambling. You're hoping it reverses back down. And so an actual trade, to get back to my point, that an actual trade has you have actual trade plan. Okay, you know what your entry is going to be. You know if you're going long or short, bullish or bearish. Okay, and you know what your entry is going to be. I'm getting in at 156, and my stop is going to be 154. You know what I mean? If you're trading options, maybe it's a lot tighter than that. You know, maybe you're only putting in a 50-cent stop. You know what I mean? Put 50-cent stop, and that's it. I'm not wasting any more money out, you know, below that. I'm out. If it sets back up and getting in, that's a trade plan. Okay. If I get stopped out, fine. You're saving your capital. You're saving, you know, you're actually trading small loss, and then you're getting back in. All right. And then one thing that we do here in the strat as well, and I keep teaching that. And Bien, shout out to Bien Cruz. She actually was in my strat camp webinar last year. We always get in with small positions, okay? Our initial position is small. So if you're trading shares, you just get a few shares. If you can buy 10, you buy 5. If you can buy 5, you buy 2. If you're in options, you start with 1 or 2 calls. You know, there's other people out here buying lots. They're buying like, you know, 30, 40, 50 contracts at a time. For in the strat, for what we do, small. All right, that way if we get stopped out initially, you know, people talk about fake outs all the time, but if we get stopped out, it's a small loss. Okay. This hammer and force did go in force. It only worked for about 15, 20 minutes, and then sellers came in. I'm stopped out, small loss. I'm done. And it is a small loss. Okay, but when you put on big size, you know, even though you have that, you know, these tight stops, you know, I mean, your losses are going to be bigger. So we want to create those winning positions and then add to them. Okay. I create winning positions, add to them, and defend them with tight stops. That's your new trading mantra. I create winning positions, add to them, and defend them with tight stops. But sometimes it just blasts. You know what I mean? Sometimes it just rips. And you don't have time to AMD. Let's go look at AMD. Sometimes you don't have time to add. You know, they don't give you enough time. I couldn't add. It was going too good. You know, let's look at AMD on Friday. AMD on Thursday. Sorry, AMD on Thursday. Bam. The only thing that was going green. Here's your 60-minute charts. Let's just we got a 2-1-2 reversal up, and it went in force at 155, and it just goes. This candle was amazing, and we like long and red green bars, right? And this is just awesome. And here's the second hour. Awesome. Just keeps going. But then scenario 3. Okay. For the people that are here, I'll put on the labels so it's a little bit easier for you to see. If you're out there listening to this podcast again on audio only, the third hour went scenario 3. All right, it traded above. It went to 166.81, and then the sellers took control. All right, all the way back down. All right, it actually opened up at 165, went up above the second hour, and then came right back down. Once it went below 163.51, it became a scenario 3. Sellers took control back to the lows. Okay, so sometimes you don't have time to add to your position. I get that. That's fine. But at least you know, because you have a trade plan, you have a good trading plan, you know this was awesome. This first hour was amazing. Second hour came in, still good. But then the third hour came in and it starts coming down. Sellers are, buyers are taking profits. The rest of the market's going, red. Once it goes scenario 3, time to take some profits. Okay, the people that are gambling aren't thinking like that. The people that are gambling going, AMD, don't care, holding it. It's AMD, I'm buying some, it's 3, it's red, I don't care, buy some more calls, buy some more shares. Fourth hour, don't care, buy some more calls, it's gonna keep, here it is, see, told you it's gonna go green. Scenario 3, for those people out there in radio land, scenario 3, right? It goes scenario 3, they take them down, it comes back up above 162, giving everybody hope that this is going to keep going to the highs, but it doesn't. It just trades sideways, and then Friday does nothing. Okay, the people that are gambling are not thinking that way. All right, they're thinking, okay, we're going to get back up to 166, I'm buying more. You know what I mean? And only losers average losers. You got a losing position, you're not taking any profits, you don't have a reason to stay in this thing, but you're not giving yourself a reason to get out. It's not a good situation, okay? It's not a good situation. There's only 2 ways you can blow up an account. Only 2 ways. One is not having a stop order or not having any stops at all. The second way is to average down on losing positions, okay? So I suggest to just cut them. Just cut the losing position. If it's red, and the contract's red, your shares red, there's no evidence that this is coming back to the highs or going back in your favor, just cut it. Take the loss. Hopefully it's a small loss, and if it sets back up, you can get back in. If AMD gets above 161.35 and it keeps going to the highs, you're in. You know how to get in, you know where to get in, you know how to write that trading plan. A gambler is just going to look at that and go, it's green, we're just buying calls. It's on right now. It's on like Donkey Kong, as some people like to say. That's gambling. I don't want you to gamble. I want you to have an actual trading plan. Know what your entries are. Know where your exit's going to be if this goes south, and even if it goes well, even if it goes really well. Let's go look at Apple on the weekly chart. You have a trade that's just amazing. You still have to get to a point where you got to take profits, right? If not, like I said, you're gambling. Here's our broadening formation on the weekly chart on Apple. All right, your entry would be, there's a 2-1-2 reversal up right here on the week. it goes before us on April 29th, above 171.34. All right. And it goes for 1, 2, 3, 4, 5, 6, 7 weeks to the highs. Gets all the way up to 220. 220. Amazing trade. All right. And then last week it goes inside week. So now what we're looking for is a 3-1-2 reversal down or 3-1-2 reversal up. For you guys watching me on this on YouTube, I put in, this is a fake candle. This is not real. This has not happened yet. Okay? I know you guys, this is what we're looking for next week. Is this going to go 2 down? 3-1-2 reversal down. All right? If it does, that's going to be your exit. If you were in from way down here at 171 and you got out at 207, that's an amazing trade. If you were in options, that's a great trade. You had to buy time to do that. But that's a great trade. That's a great trade. And if you're in shares, even if you had only a few shares, that's still a really good trade. From 171 to 207, wow. Are you serious? You should be happy. Have an exit strategy. How am I getting out of this? I've been in this thing for 7 weeks. How am I getting out of this thing? How do I get out of it? Well, if it goes 2 down on the week, I'm getting out at 207. Tomorrow, again, this is a fake candle, okay? For people that are watching me on the stream, this has not happened yet. This is just for a demonstration. It could go inside. It could open up at 213 and continue up. It could. Again, this is just for a demonstration. How do I get into this trade? How do I get out of it? Okay, especially if you're a long-term trader with shares, how do I get out of it? How do I take my profits? At least take some. You don't have to take all of it. Just take some. Get out of some of it. So anyway, gambling, just to wrap this thing up, thank you so much for being here, but just to wrap this up, gambling, if you're gambling, you don't know what your entry is, you don't know what your exits are, you're just throwing on shares, you're just throwing on calls and see where it goes. Or if it's going to the lows, you're just as many puts as you can buy and you're just holding it. See where it goes. Hopefully they sell all day, but if you're a trader and you're actually trading, you know what your entry is and you know where your stop is. Okay? Now, I'm not going to get into moving your stops. I'm not going to get into, risk to reward ratio and all that stuff in this podcast right now. I just want to clarify the difference between gambling and trading. Okay? And some people are saying out there that it's kind of synonymous, like it's the same thing. It's not. Okay? It's not. If you're actually trading, you know how to get out. You know how to get out if it's going bad, and you know how to get out if it's going good. You have to have an exit strategy. Where do I take my profits? Where do you take them? Some people aren't waiting for that reversal to the downside. Some people are going, okay, here's the reversal, here's the target. I'm taking my money at the target, and that's smart. That's okay. That's smart. Some people are waiting for that reversal down. And I'm not getting out till you get that reversal down. And that's okay. That's fine. But at least it's a lot better than just just full porting into a position and hopefully it goes. We've always seen that terrible. There's always, someone always posts something on Twitter or YouTube of somebody trading futures and they're watching like 2-minute charts and you watch them lose like $1,500 on 2-minute charts because they just keep averaging down, or they're like, it's got to keep going. It's got to move to the highs. It has to, and it's not. I don't want you to be a part of that. I don't want you to. So have a trading plan. If you don't have a trading plan, you don't know how to create one, and you don't know how to trade with actionable signals, go check out my execution course over at thestratsoldier.com, where I talk about how to trade hammers, shooters, inside bars. And then also go check out the Strat Trade Checklist, where I talk about how to trade with time frame continuity effectively. Okay, how to see those actionable signals on what time frame, and how to use that effectively. All right. Thank you so much for being here. This was the first time I ever live streamed on here, so thank you so much for you guys being in here. Very cool. I'll talk to you guys later. Peace.